feels like people are girding for change. And you talk about some of this in your recent outlook. You say that there is a great deal of uncertainty because of geopolitical conflicts, protectionism, and disruptions in trade. Can you describe what exactly you're talking about with protections? Is this tariffs? Is this subsidies?
So firstly, I think we should recognize that the global economy has turned out to be quite resilient after some very hard knocks, and which is why we have growth at around 3.2% for this year and next. But looking ahead, there is a great deal of uncertainty. There are questions around what kind of policies will we have, depending upon the results of important elections, conflicts in the Middle East that could escalate, and you could see much wider regional tension, and oil prices could go up. What's going to happen to growth in China? That's another factor. So there are many risks. There's lots of uncertainty. Trade policy is also being discussed at these meetings quite heavily, and questions around that. All of this are risks that we see looking ahead.
How much is the U.S. election dominating every discussion that you have with everyone?
You know, it is very important. What happens in the U.S. matters for the U.S. and matters for the whole world. So as you can imagine, it is an important part of the conversation.
Is it making people feel paralyzed? And I'm talking about policymakers, and I'm talking about, investors. Is it making people feel like they can't really make any moves until there are some outcomes for some of the big events and the elections that are coming down the pike?
When you see the data, you don't really get that impression that people are paralyzed. If you look at the U.S. economy and how it's doing, consumption is doing very well. Labor markets are doing well, even though they've slowed some. And the financial markets are very strong. Financial conditions are easy. So you aren't seeing any, negative knocks coming from that uncertainty right now. But yes, I think as we get closer to it, that goes up. And we'll see what comes after that.
Yeah, and I was speaking with the Bundesbank president this morning, and he was talking about how it's hard for him to really gauge some of the inflation risks, because for them, inflation would be a lot higher. Do you feel like that's the case, that interest rates are going to have to go up more significantly as more tariffs go into place?
What we do know is that tariffs are inflationary. They do put pressure on prices. That's usually what we see in the data, looking at past episodes of tariffs that have been put in place, right? In addition, there is a very important question of what the stance of fiscal policy is going to be around the world and how expansionary it's going to be. The U.S. economy is very strong right now. At the same time, we are seeing inflation coming down, and our expectation is that it will continue to do so, and the Fed will continue to cut rates. Now, if there is a much more expansionary fiscal stance, that could move the argument in a different direction.
Are you surprised that interest rates, I don't want to say interest rates, that 10-year treasury yields, that the benchmark treasury yields on the longer term, or even just globally, aren't reflecting more the $100 trillion of global debt that you've reflected in your latest IMF projection?
The rate for the U.S. debt is going to also be a function of the strength of the U.S. economy, the strength of its institutions, and there's tremendous faith in that. Again, the U.S. economy is one of the strongest among the major economies, if you look at those. And when we compare the U.S. to the other G20 economies, it's the only economy whose GDP is higher now than we had projected before the pandemic. The only major economy. So it's a very strong economy, a lot of confidence in it, and that's showing up in the yield numbers too.
What I find amazing is that we talk about how well things are going, and I got a sense from you. You said before you start talking about the risks, the economy is doing really well. Understand this. Is there almost this sense of, why are people not feeling that? Why is that not reflected in the sentiment on the ground in so many surveys, given the fact that the data, it looks pretty much like Goldilocks, like soft landing, all these things that people hoped for?
Well, the fact is that we have inflation coming down, but the price level now is much higher than it was a couple of years ago. And for people and their consumption baskets, they look at what the price level is and they say, well, prices are much higher, even though their incomes have gone up too, which is why you see consumption holding up very well. But there's a lot of salience of what the price level is when you go to the grocery store and your basket of goods and how much they cost. I think that's having an effect on sentiment. But I think we do have to recognize that, in the past, when central banks have tried to bring down inflation from the kind of high levels we've seen, it's been much more disruptive to economies. This is quite unique, that we're having inflation coming down, and we are likely to see a soft landing.
You also talk about trade policy, and I want to go there because right now, at the same time that we're at these meetings in Washington, D.C., there is a conference going on in Russia with the BRICS, right? The different countries, Brazil, Russia, India, as well as China. Xi Jinping and Vladimir Putin are there. A lot of the delegates from China are not here, they are there. Is that concerning to you?
So let me give you a fact that I think will help assuage a bunch of concerns. Just very recently, our members, 190 of our members, they had to all agree to this on a particular reform that would help the IMF support to low-income countries. All 190 member countries of the IMF supported this. That just tells you that there is a lot of support from our members for the IMF, and they see a great deal of value in this institution. So, we recognize that several of our members are parts of other groupings, but from our perspective, we see them very engaged with our own work.
How difficult is it to come up with statements that reflect a unified vision, given that there's sort of a fractured world? I mean, we've talked about this. You did a lot of research on this that I think is really interesting about how there are parties that are kind of the third parties that are helping to be the conduit for trade between different countries that don't want to do business together. I mean, how is that making it difficult to sort of have the same role as you've had traditionally?
I mean, there's no doubt that geopolitical tensions are higher than we have seen in the past decades, and there are more countries questioning the value of all the close economic integration that we have had, questions of how to de-risk your supply chains, national security concerns. All of this is taking center stage, and that obviously has implications for any multilateral institutions. But I have to say this, that what I am very pleased with is how our members, all of them, are still working very closely at the IMF to push through important reforms for the world.
You talk about the developing world, and I'm wondering how much there is a convergence in your mind between activities in the developing world and in the developed world, especially with the deficit and some of the increase there, and that you're seeing the opposite in a number of developing countries where they're actually reducing debts and trying to be more disciplined.
Okay, so one of the points that we're making through these meetings is pointing to everybody that we have a problem because debt is very high and our projected growth, especially into the medium term, is not great. It's a low growth number. It's 3.1% as opposed to what it was for a few decades, which is around 3.8%. That is a problem, which means all countries, including advanced economies, need to act on that. What is true is that for developing countries, they don't really have a choice. There's a lot of pressure coming from the markets. They have high debt servicing costs. We are concerned about liquidity issues in several countries, and that, is coming after these countries have accumulated large amounts of debt through the pandemic and the big increase in energy and food prices. So yes, there's differences, but that's always been the case. Countries like the U.S. can run much bigger deficits than developing countries can.
Do you think that the U.S. could face a Liz Truss moment?
U.S. debt is very sustainable. It is a strong economy. But all of that said, our advice to the U.S. is that it should have smaller deficits, given also that the economy is above potential and doing really well at this point of time. So bringing down the debt, and especially to build up for another shock or another crisis, which will come. We know this is not the last time we have a crisis.
Do you think that, just want to end here, this question about regime change, and that some people are saying that we're entering a new paradigm where there is a greater acceptance of protectionism, of trade tensions, of this question about who's friends with who and who's going to scratch who's back, but not necessarily the same sort of free trade era. Do you think that this is the beginning, the middle, or the end of that evolution?
Well, we certainly have changed in the sense that there was a time when countries were hyper-focused on efficiency, and when they were deciding who to trade with, the only question was which was the cheapest source to buy it from. Right now, they're stepping back and saying, well, we need to make sure our supply chains are secure, that we are not exposing ourselves to big risks, that there are not big national security concerns. That change is already happening, and you see that in the data. But it's still of a small magnitude. The question is, how much further down the path do we go? And that, I think, is uncertain.